Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, January 25th, 2011. It's 11:30 a.m. Eastern Standard Time in the United States, 4:30 p.m. in London, 12:30 in Bermuda, and Mexico City, 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. Part 2 of the interview with Tom Bolt will occur immediately after our break, which will occur after 4 quick stories. Just 2 bits of breaking news. Travelers came out with a higher than expected quarterly profit this morning. And Jay Fishman, the CEO, said that there were early signs that its business was picking up. Businesses were finally willing to spend more on insurance. He said the company showed a net profit of $894 million. Or $1.95 a share, compared with $1.29 a share, or excuse me, $2.36 a share last year. So this beat analysts' estimates. Also in Egypt today is National Police Day, the 25th of January, and there's a crowd of some 20,000 people in downtown Cairo that are currently being hit with tear gas and rubber bullets by Egyptian special police. The unrest has spread to other cities in Egypt, also in the cities of Alexandria, Mansoura, Asyut, and Tanta. Many of the demonstrators are chanting, "Remember Tunisia." So this spillover effect seems to be happening all across that northern Arab rim. We'll now go to our main stories for insurance. Yesterday's deadly explosion that killed 30-plus people at Russia's main Domodedovo airport in Moscow has already prompted a remark by Premier Putin that retribution is certain. Also, there's some ripple effects seemingly in the insurance industry. According to market sources, the airport purchases $150 million of liability insurance on a $1 million primary policy. The Aon Russian subsidiary, Aon Rus, is understood to be the local broker for the airport. The cover is then placed with the local insurer Avicos Insurance. Avicos uses Willis to place the cover internationally. Global Aerospace is the lead on the package, and other insurers, including Charters, are on the account. However, since the explosion seemingly was the work of terrorism, it is believed, but not certain yet, that terrorism insurance is not included in the cover for the airport. The islands of Guernsey, Europe's largest captive domicile, confirmed this morning that it will not be seeking equivalence with the new Solvency II package. They cite uncertainty over the framework's treatment of captives as the major reason. Guernsey is not in the EU, so it doesn't automatically come under the new Solvency framework. Peter Nevin, the CEO of Guernsey Finance, the promotional agency for the captive, said, "We've carried out a thorough evaluation of Solvency II and believe that as things stand, seeking equivalence would not be right for our market, which is a world leader in captive insurance." He went on to say, "Indeed, the treatment of captives under Solvency II remains uncertain, so we'll be keeping a close eye on this and Solvency II as a whole to assess progress and how it might impact our market." A couple of tantalizing hints here with this news. Florida's insurance regulator Kevin McCarty and New York's James Rinn have been appointed to new positions for the upcoming year at the National Association of Insurance Commissioners. Of course, people are waiting to see whether or not Superintendent Rinn is going to be reappointed by new New York Governor Andrew Cuomo. This would seem to be a good sign. McCarty has been reappointed chairman of the International Insurance Relations Committee. Rinn is going to be the vice chairman for the coming year. Both New York and Florida are the only states to have reduced their collateral requirements for strongly capitalized and rated alien insurers. And here's good news. Robert Benmosh has announced that his commitment to AIG for the next 12 to 18 months is a go. This is after he has received encouraging news in his battle against cancer. Benmosh, who became CEO of AIG in August of 2009, revealed late last year he was battling cancer, but said at the time he was intent on continuing to work a normal schedule. In a statement released this morning, he said that he's likely to continue in his role until retirement sometime in 2012. Benmosh said, "My doctors have given me an encouraging prognosis as I continue to undergo treatment for cancer. As we all know, nothing in life is certain, but given that I've responded well to my treatment, I believe I can continue to apply my commitment to AIG over the next 18 months. Stock market in New York after a good day yesterday is down about 56 points. We'll go to 2 words from our sponsors and then come back with part 2 of the Tom Bolt interview. This is Tom Bolt. He's the Director of Performance Management at Lloyd's. Yesterday we ran part 1 of an interview that we recorded with Mr. Bolt late last week, and in a second we'll run part 2. It runs for about 12 minutes. At the conclusion of today's broadcast, the interviews will be combined and run in their entirety and available in the archive section, which is right under the TV box on CATEX.com, or it's on CATEX-TV.com. Here's Tom Bolt, the Director of Performance Management at Lloyd's.
And I try to make sure people understand both sides of the equation of what we'll expect from them as members of the mutual, in addition to what they might expect from us in the way of the broader licensing, the efficiency of capital, and some of the other benefits.
That education process, in specific regard to the delegated authority business, for example, I've noticed that you're intent on shining a light, a technological light, if you will, into these indigestible masses of hundreds of thousands of risks that just come in every day, insisting that these be reviewed and looked at and accounted for individually. I mean, how considering it 30% of your business plus, I mean, this is a big initiative for you. Can you talk a little bit about that? How is that faring? I mean, what kind of pushback, if any, are you getting from the actual people writing the paper on it?
We aren't actually getting much pushback at all, and what we've done over the last year, while on the one hand, if you look at the strategy document from Lloyd's, we've indicated that delegated authorities in many cases are our preferred way of expanding the footprint of Lloyd's into jurisdictions where we can again capitalize on the local knowledge and local expertise.
Correct.
That's great, but at the same time, with giving some people these authorities, which range from prior submit where there's no real authority, it's mostly a marketing arrangement, to ones where there is some freedom on rates and structure of the contract, that we pursue the old Ronald Reagan approach, which is trust but verify.
Uh-huh.
And the verify part is what we've tried to do by strengthening what we do on the auditing front. If, for example, you have a delegated authority binder that you've entered into, you're also supposed to have, as a managing agent, an audit plan for that delegated authority. We have a team of people who go around to the managing agents and say, okay, let's see your audit plans. Let's see that you've actually affected them. If you have actually had the audit done, did it come up with any findings? If there were findings, have you acted on those findings? Mm-hmm. So we don't actually go out and audit the delegated underwriting authority holders themselves, but we insist that those people doing business with them have done what it takes to make sure that the original contractual undertakings that they had and the understanding of the business they were going to write continues to be the case. And given the pressures of a soft market, that's as important now as it has ever been.
Indeed.
The other thing that it's helped us with, by the way, is in this focus on auditing, the delegated authority underwriters themselves, the cover holders, have said they like what we're doing to try and force a more thorough but consolidated audit rather than have 5 or 6 syndicates who do business with them do audits in sequence, trying to collapse that into one really good audit that is shared amongst the underwriters seems to be a preferred way to go.
I think that's possibly a very key point, because each one of those cover holders is the recipient typically of an annual visit by a representative of a Lloyd's syndicate, who comes with a tally sheet and sits down and says, okay, here's how you did or here's how you didn't do. So those cover holders often are overlooked. They're also looking for protection or cover from sort of being treated uniquely. So that's an interesting observation on their point. Let me point out another area of interest, and that would be the fact that I mean, you're the world's largest broker market, and the top 3 brokers now account for at least 50% of your premium. And we're talking, of course, about the soft market cycle. That means that premiums go down, and that means retention levels go up, and all contribute to a lower commission stream into the broker market, into the broker's coffers. Which means that being smart people and stock holding companies, they have to try to maximize new revenue as much as possible, so they've come on with a variety of new services and offerings. One of the points in your plan, you mentioned that initiatives that brokers might have come upon in order to increase revenue, any such initiatives that could give rise to, quote, prudential concerns on the part of the franchise board would prompt a quick response by the corporation. Can you talk a little bit about that? I mean, we all read the same newspapers. We all know some of the public situations with contingent fees and things of that nature that have been brought up. And how do you see the situation from where you sit, considering you're the person who would be seeing and discerning whether or not it is a prudential concern, than being the one who would be promptly responding?
Okay, there's a few aspects to that. In terms of the brokers, I have an enormous sympathy for their position. In a declining revenue market, they're under considerable pressure to continue to show earnings growth and other things, so they tend to put pressure where they think it can bear the most results, and somewhat surprisingly to me, given how much value they really add to their customers, they don't seem to be able to ask their customers for much more, so they've turned at this point in the cycle to asking underwriters to pay a bit more. And in many cases, they try to offer services and other things that would justify additional payments that would be, at least in their terms, billed as services provided rather than attaching to any one submission or underwriting placement slip. If you do provide services under the new Solvency II guidelines, you need to have a service level agreement, you need to have service standards that are monitored, and you have to watch them and pay. And pay attention to them, so you make sure that that everybody's living up to what it is they're charging you for. If you can't bring some specificity to those charges as to how they relate to the services you are offering, then the UK has just passed a fairly broadly written bribery act, which everybody, even looking at corporate entertainment over here, is looking to make sure they're not falling afoul of the new terms and strictures of that. So you have to be fairly careful in terms of what you do to do that. But having said all that, my personal concern is what consenting adults do in terms of what the proper consideration between intermediary and insurer or reinsurer is between those consenting adults. But what I do think it's my responsibility to do is to make sure that there is appropriate disclosure to the client of the actual cost to him of what he's paying and what his intermediary, because these guys are acting for the client, not for the underwriter. What is his consideration in the transaction? So to try and make it possible for people to be aware that there are fees that may not show on the slip, if they exist, we try to highlight them in the aggregate, not specific. And also, key to that is I want to make sure the market understands what its true cost of distribution is, and it doesn't get lost in the accounting below the line or elsewhere. So my concern is for transparency in terms of what the real costs of an intermediary channel are, and also to make absolutely sure that there's every opportunity for the insured to understand his costs, so we don't find ourselves called on the carpet in the way some people were called on the carpet 8-9 years ago.
Right. I think that would be that's a very, very laudable goal, and we wish you well with that. And I think you're going to succeed with that. Let me just give you 3 quickies. I know we're taking up some of your time. I noticed in Insurance Insider was reporting yesterday that, quote, an internal Lloyd's document, which whatever that means, could be something they found on the radiator, shows that managing agents have planned to rein in their aviation underwriters this current year. Can you elaborate anything about that?
Yeah, I'm not quite sure what it is they're seeing. What I can say is every November and every May I give sort of a State of the Nation address, and I talk about the various class of business and what the prospects are for them. And this is based on what managing agents tell us they're going to do through their business plan. And again, it's synthesized, and it doesn't give away anything about any one agent. It's sort of some market statistics, which by virtue of being in the market, we think it's responsibility of ours to tell you what's going on in that market. And as you might expect, sometimes people tend to share these things with journalists, and no big thing against journalists. They do what they do, and I think what they could be doing is drip feeding what they think was in that presentation, because I did share it with members of the market on a redacted basis where there weren't any specific numbers by the side, and maybe they've been able to extrapolate from some of those graphs on what they think is happening. And in fairness, if you talk about the aviation market, it wouldn't surprise me if the market members were planning to write less this year than they did last year, given the results in that market.
Right.
And the failure of prices to move materially.
The prices have really failed to move materially. Our friend in Hanover, Ulrich Wallen, seems that he could develop a second career as a state legislative lobbyist. He's once again pulled off a coup. He was the first one from Tallahassee to go through Tallahassee to get a reduced collateral requirement. Now he's done the same trick with New York with the reduction from 100% down to 20% for the alien insurer rule. Any reactions to that? Comments? Long overdue? Or?
Well, I certainly applaud Ulrich's efforts and success. And I guess what I can say is we are also in discussions in both places. We're a little more complicated than one insurance or reinsurance entity, and so it's going to take us a little bit more time to sort of work out the details, but it's an incredibly positive move to see both Florida and New York taking these steps.
One other final last question. Lord Levine is busy setting up his bank. We wish him the best. To the extent I have any money, I'll probably deposit it there. Any movement on the next chairman? Do you think it should be somebody from the industry or outside the industry? What's the timeline on that that you've heard?
Lord Levine is here through the end of the year, 2011, and the process of identifying candidates is well established, and they're down to a shorter list of who's left, and that final interviewing process of those short few is occurring. I'm not sure when, the white smoke will come out of the corner of the Vatican on this one. But I know that the Cardinals are certainly meeting, and it looks like there's some fairly good progress on determining who might be the replacement. I would be very surprised, additionally, if there weren't a period of time where it was widely known who the new chairman would be in anticipation of when Lord Levine would leave. So I don't know the exact dates. I know that it hasn't finally been determined. I do know that they have some very, very viable candidates. So hopefully that process goes as it currently is, which is pretty smoothly.
Yeah, it's certainly the source of a lot of speculation, as you can imagine. So, well, Tom, thank you.
And Lord
Go ahead.
Levine's been great for us in terms of helping us expand the platform and really put Lloyd's back on the positive slope that I think it is.
He's been very visible. He's been very diligent, energetic, and he seems to be absolutely indefatigable. He just does not get tired.
Well,
you see.
When I'm 69, I hope I have as much energy.
Well, I see date lines with his name in them, and they're separated by 2,000-mile hops, and they're like one day after another. It's like, my God, the guy must live on a plane. So. Well, Tom, thank you very much for your time today. We appreciate it, and we'll look forward to seeing you soon and talking to you in the future, and best of luck with a very tough job.
Well, thanks very much, Frank. I appreciate it.
Talk to you soon. This story popped up yesterday, but it took Friedrich Krieger at Insurance Day to flesh it out a little bit. German insurers have been issued a wake-up call over their dealings with Iran, which are, of course, the subject of trade sanctions. There was a liability insurance conference in Hamburg on Monday, and Peter Herbig, the head of the legal department at Zurich Financial Services' German general insurance operations, reminded the group, quote, "There is a ban on selling insurance from Germany in the Iranian market. Violations," he said, "can be punished by severe fines." He went on to say Germany and Iran are interested in business with one another. That's why this topic is one that should not be underestimated by the insurance industry. According to Herbig, it's forbidden to sell insurance or reinsurance to the Iranian government, public institutions, enterprises and agencies, or to persons and organizations who are acting on their behalf. Herbig said, "I can understand," this is the understatement of the year, "while we are not allowed to sell insurance to the government. However, it's often very difficult to know who owns an enterprise." No kidding, the Revolutionary Guard, as we know, owns a considerable amount of the economic clout in Tehran. Some disturbing news coming from the Exchequer. Britain's economy shrank by 0.5% in the last quarter of 2010. This is raising fears of a double-dip recession. The UK Office for National Statistics said December's severe weather was largely to blame. This will show the first contraction of growth since Q3 of 2009. Of course, the figure is likely to spark concerns over the strength of the British economy as the coalition government is introducing their austerity measures. George Osborne, the country's finance minister, said the figures were disappointing, but that the country would, quote, "not be blown off course by bad weather." Presumably he meant literally and figuratively. Well, here's an interesting story. Bermuda-based Endurance Specialty Holdings has agreed to pay over $320 million to buy out the 15% stake of Perry Corporation. Perry Corporation is a hedge fund operated by Richard Perry, which is one of the founding shareholders of Endurance. Endurance is going to buy back about 7.2 million shares. They said that the stock is going to be purchased for $44.99. Endurance is one of the 2001 companies said is going to use the existing cash to fund the repurchase. Now, Perry has a seat on the Endurance board, and last February he urged Endurance to seek merger partners. This comment that he made a regulatory filing. He also went on to say in that same filing that the change of leadership at the company, which at the time had Ken Lestrange retiring and being replaced by David Cash as CEO and Bill Jewett as president, did not position Endurance, quote, "to capitalize on industry consolidation opportunities." In the 11 months since Perry made his comments, Endurance's share price has risen by 18%. And that's in one of the worst markets in memory. Well, Mr. Perry has been given his check and told to leave. That's the news for today. If we have any other breaking news, we'll come back and tell you. The interview from Tom Bolt will be posted in its entirety on our archive sites. Thank you for watching, and we'll see you tomorrow.